Hello, everyone. It's Tom Miles, Dean of the Law School. Life around the world has changed in ways we would have never imagined over the past few months and over the past week. I hope that you and your family and your friends are doing well during this extraordinary period and are remaining healthy and safe. Over the past months, life at the law school has continued, albeit in a different way for us. I've been so heartened and inspired by how our faculty and our students and our staff have come together to ensure that we continue to provide a challenging and rigorous legal education. I'm happy to report that we are well into the exam period of spring quarter, and we will, in just a few weeks, celebrate the class of 2020 with a virtual convocation and hooding ceremony. I would now like to welcome you to today's online Emeritus lecture. This is a special program for alumni who graduated 40 or more years ago from the law school. Thank you all for tuning in, and thank you for your ongoing engagement with the law school. It's an honor for me to introduce today's distinguished faculty speaker. John Rappaport is Assistant Professor of Law and the Ludwig and Hilda Wolf Research Scholar. And I'm happy to report that as of July 1, John will be Professor of Law. John Rappaport joined the law school faculty in 2015 after having previously served as a Bigelow Fellow from 2013 to 2015. I will not go on about his extraordinary academic credentials, his prestigious clerkships, or his distinguished practice experience. But I will tell you that John studies criminal procedure and criminal justice. Within these fields, his work examines the boundaries and interaction between public forces and private forces, including liability insurers, retail justice organizations, and the private defense bar. Much of John's research focuses on policing and police misconduct, including the effects on police behavior of collective bargaining rights, unionization, and regulation by insurance. After John's presentation, I'll ask him a few questions. These questions have been submitted in advance by you, the audience members, and I'd now like to turn our program over to Professor John Rappaport. Welcome, John.
Thank you very much, Tom. I appreciate the invitation to speak to this event. Of course, when you invited me, the idea was that I would be speaking to this group in person, and it's disappointing that we're not able to do so, but I'm glad to be able to join you this way. The research that I want to talk about today is about liability insurance that covers police misconduct and how the provision of that insurance creates an arrangement in which private insurance companies regulate the police. And obviously, this is an exceptional time to be talking about this topic, and there are ways in which this topic does and does not directly connect to what we've all been following in the news over the weekend, and I'll comment more on that in a second. So let me get my slides up here for you. Okay, here we go. So there is a virtual consensus in the legal academy that the police are one of the most difficult institutions in all of government to change. They're extremely difficult. Some people would even say nearly impossible to change. And there's this whole catalog of literature, the purpose of which is to explain why all of the familiar remedies in our toolbox, the ones that we teach about in law school, why these all fall short. And at the same time, we have a dominant model of policing that is an understanding of the set of institutions that supposedly shape what policing looks like. And that model completely overlooks the role that liability insurers play. And as I'm going to explain today, I think this is a big oversight, a big hole in the model, so to speak. So my principal claim in the comments I'm going to give today is that insurers regulate law enforcement agencies and that they are able to effect meaningful change in those agencies. And there's a couple of significant caveats that I want to get out onto the table right at the outset before I proceed. The first one is that not all law enforcement agencies are insured. The biggest cities in the country, including Minneapolis, Minnesota, are self-insured, which basically means that they just cover the costs of liability out of pocket. But there are over 15,000 municipal and county law enforcement agencies in the country, and the vast majority of them do insure. And it's important to remember that most of the police activity in this country takes place outside the biggest cities. So cities like New York, Chicago, LA, to a lesser extent, cities like Minneapolis or Indianapolis, they get a lot of the attention in the media, but I did some back of the envelope calculations, and it looks to me like about 2/3 of FBI index crimes, as well as 2/3 of police involved fatalities, actually occur outside the 100 biggest cities. And, you know, there are cities, just for a reference point, there are cities like Fremont, California, Hialeah, Florida, and Garland, Texas. These are among the top 100 largest cities, okay? And I'm saying that 2/3 of crime and 2/3 of police-related fatalities occur outside the 100 largest cities. So while obviously what's going on in our major cities, including Chicago and Minneapolis, is extremely important, there is a lot of police activity and a lot of police misconduct, frankly, that occurs outside the biggest cities. The second caveat is that I'm not trying to claim that all insurance companies are good regulators of the agencies they insure or are even particularly active. Instead, this is an argument about the potential of these insurers to affect change. And likewise, I'm not trying to claim that there is today a present overall social benefit from regulation by insurance. I think this is, again, an argument about the potential for change, not an argument that everything is working like we should want it to work, okay? But in light of all the literature that I referenced and what you see on your screen, I think if insurers can make reforms happen, then that alone is significant because it's very difficult for courts and other actors to make these kinds of reforms happen. So how does this work? Well, insurers write very broad liability policies that cover almost all police activity. So if you look around for advertisements for police liability coverage, you see things like this. Our coverage includes intentional acts, violation of civil rights, assault and battery. Here's another one. Enhancements to our coverage include civil rights violations and discrimination. This is policy language from an actual police liability policy. And you can see here, personal injury is the covered event. And personal injury includes things like assault and battery, discrimination, false arrest, and violation of civil rights. Now, these are among the first materials that I discovered when I was doing this research. And I think most people would have the reaction that I had at the beginning, which is that this is shocking. Right? You immediately start worrying about moral hazard, right? The idea that insurance leads to more misconduct. So every time I go rent a car at Hertz and they ask me if I'm sure I want to waive the insurance coverage, and I think, I'm pretty sure that my regular auto insurer is going to cover me. I'm not totally sure, but I know I don't want to pay extra, so I waive the coverage. You know, I drive a little more carefully because I'm not sure that I'm covered. And so conversely, when you're sure you're covered, you drive just a little bit less carefully. And so the fear would be that if insurance companies are providing this kind of liability coverage for these awful things like assault and battery and civil rights violations, that we might see more misconduct. And moral hazard is very real, and it's a very serious concern. But in terms of evaluating the overall effects of liability insurance, moral hazard is just the beginning. Because when the insurer assumes the risk of financial liability, it also develops a financial incentive to engage in what we call risk management or loss prevention. So this is why a property insurer will offer incentives to homeowners who install smoke detectors or a security system. It's good for the insurer's bottom line. They want to reduce the risk of an occurrence because they'll have to pay to cover that occurrence. And in this context, what that means is that an insurer that's writing police liability coverage may profit by reducing police misconduct. And that's the crux of the argument here. And so the bottom line to keep in mind is that whether liability insurance is going to be net socially beneficial depends, very roughly speaking, on the trade-off between the risk-enhancing effects of moral hazard and the risk-reducing effects of whatever loss prevention the insurers are engaged in an effort to regulate the insureds. And so I want to spend the bulk of my time today showing you what that loss prevention looks like in the police liability context. So when I talk about loss prevention here, I'm talking about at least 6 categories of insurer activity, and I'm going to go through them somewhat slowly for you. And the first one is what I call policy guidance. So suppose you run a police department and you want to know how your officers should be conducting strip searches of detainees before they're booked into a holding cell. And you want to know how to do it without violating the Constitution and triggering potential liability. Well, it turns out Travelers Insurance Company, the same one that might write your homeowner's insurance, they actually have a pamphlet on that. And they can help you promulgate or update your strip search policy. Munich Re, which is one of the largest insurers in the entire world, also has material on this. Now, some of this policy guidance gets to be very hands-on. So this is some material from the website of an insurer, and they describe here how our risk management department will review established policy and procedure manuals and offer written opinions from the review. This is specific to the law enforcement context. Now, depending on the degree of expertise among the personnel that work for the insurer, the insurance companies will sometimes bring in these outside consultants to do this kind of work. These are usually retired police officers, sometimes even retired police chiefs. And they've found these consulting businesses, and they work either directly with police departments or as sort of liaisons between police departments and insurance companies to do the kind of policy review and updating that I'm talking about. In some cases, insurers will even purchase or subsidize a turnkey policy writing service like this one, which is called Lexipol. Lexipol is a small but growing company that was founded by a couple of former law enforcement administrators. And what they do is they'll provide you with a prepackaged policy manual that has all the policies and protocols that a police department would need, reflective of current law. And not only that, they'll provide you a great service, which is that they have a team of lawyers and paralegals who actually track all the legal developments in the courts and the legislatures, and they will push out jurisdiction-specific updates. So, of course, it's not just the US Supreme Court that we need to pay attention to, but also the Illinois Supreme Court. And they have teams that follow this. And if the Illinois Supreme Court issues a decision that speaks to police liability and should affect the policy that police departments in Illinois have, Lexipol will push that out to you and make sure that your policies are up to date. This could be beneficial for a couple of reasons. One reason is that the quality and content of your policies might actually be a factor in a municipal liability claim. But a maybe less cynical reason is that policies have been shown to actually affect police behavior. And so when you change your policy and you retrain your officers on the new policy, it does have some effect on their behavior. And so Lexipol helps you try to keep that up to date. Okay, so that's all under the umbrella of what I called policy guidance. A second category of loss prevention in which these insurers engage is what I call education and training. So insurers support police departments' training efforts in various ways. Some of them are fairly passive. They'll provide video libraries or online training systems like this one. And you can see some of the things I've underlined. They have training modules on managing traffic stops or interviews and interrogations, right? Some insurers even do classroom instruction. I spoke to one insurer from the Pacific Northwest who said that every summer, he and his team pack up and they take a road trip around the state, and they stop by lots of police departments that they insure, and they go in and do classroom training and make sure that the officers there are up to speed on the latest legal developments and police technology. Sometimes the insurers will even subsidize the use or the acquisition of what could otherwise be prohibitively expensive training equipment. So one example here is virtual reality simulators. So one popular use for virtual reality is to train police officers in driving, defensive driving, pursuits. This example is of a motorcycle, but there's a similar one with a squad car. And there are also virtual reality training simulators for the use of force. This is a fairly current looking one. I've seen these things in action. They're pretty interesting. The first generation of computer training modules were really just target practice, right? It was just a way for police officers to engage in target practice without having to go to a gun range. But the new generation of virtual reality training simulators looks quite different. Here, the officers are put through a scenario. It could be a school shooter or a hostage or a domestic violence altercation. And usually the purpose of the scenario is to try to resolve the problem without resorting to the use of force. And it's actually seen as a success if you can complete the scenario and diffuse the problem without using your firearm. Now, if you do end up using your firearm, the simulator will also check your aim and verify whether you would have hit the hostage or the perpetrator, for example. But the overall purpose of these is to try to teach officers how to navigate situations without using force. And there's a little bit of academic research, not a lot, but a little bit of research out of Canada, which finds that training officers on these simulators does tend to decrease the number of unjustified shootings in which they will engage in the field, in the real world. Insurers will also encourage training on some less obvious, but I think still very important topics, like handling officer stress, officer well-being, reducing implicit bias, and other things like this. A third category of loss prevention is what I've called audits. So insurers audit the agencies that they insure. Now, if you imagine a state legislature that passes a new law, or a state attorney general that promulgates a new executive order to try to improve policing, it's one thing, it's difficult enough just to get that law passed. But it's an entirely different thing to try to ensure compliance on the ground with a new law. And one advantage that insurers have compared to most governmental regulators is that they have boots on the ground. They can send adjusters or other kinds of representatives out to go visit the police departments and see what's going on, right? Often these people are themselves retired police officers who now work for insurance companies, and they go out and they do ride-alongs, they do what they call site visits. I've talked to insurers that say they'll go inspect the evidence room, make sure the evidence is being handled appropriately, and things like this. My very favorite anecdote, I think, in this entire body of research was from an insurer out on the West Coast who said that she sends insurance representatives to go hang out in cop bars incognito and listen to the local gossip. They want to know, what are the cops talking about? Does it seem like there are problems they're talking about? Are they complaining about the leadership? Are they talking about things that have gone wrong, or particular officers who are seen as firecrackers? When she was telling me this story, I was kind of picturing this something like, Daniel Craig here as James Bond. I think after I shook off the cobwebs, I realized it probably looked more like this scene from the TV show The Wire, or maybe even this one, where I think we can all guess which individual here is the insurance adjuster. Some of these insurance companies will also maintain watch lists of the agencies that they're worried about. This could be based, for example, on recent claims activity, and they audit those agencies more carefully. So they allocate their resources according to need, and they can send extra help and extra monitoring out to the agencies that are having problems. Okay, a fourth category is accreditation. So these insurance companies that are in this line of business a lot of them create incentives for police agencies to seek accreditation from a recognized accreditation agency. So the big one nationwide is called CALIA, and there are also state versions of CALIA. I think of the accreditation idea as a way of outsourcing a lot of the policy review and auditing functions that I just mentioned, because the accreditors do those things as part of the accreditation or the reaccreditation process. So just to give you one example, this is a very small snippet from CALIA's standards for law enforcement agencies. If you want to become a CALIA certified agency, and if you start looking for it, by the way, you can see this emblem on some squad cars in some cities. Agencies tend to be very proud if they're CALIA certified. If you want to become CALIA certified, they're going to really look under the hood, and they're going to check to make sure that you have the right kind of policies in all these different areas, and that you're training on them appropriately. And again, this is a very, very small excerpt of what CALIA looks at. The fifth category of loss prevention is that some insurers will put pressure on law enforcement agencies to discipline certain officers. Their terminology is to correct the officers, or even to terminate personnel that they view as disproportionately heightening the liability exposure of the agency. So I've collected various examples of this. Now, I should say that this is more controversial than the preceding four categories I discussed, and that some insurers I spoke to said we would never get involved in personnel decision. That's not our business. But it's not too hard to find examples of insurers that feel differently. And in each of these examples, insurers put a lot of pressure on police departments to cut ties with certain officers, including leadership, or to select an outsider. So in Calumet City here in Illinois, the department was having a lot of problems, and the insurer thought, the only way to really try to turn around the culture in this department is to bring in outside leadership. And so they put a lot of pressure on the city to bring in outside leadership, bring in a chief from outside the department. And finally, some insurers will push what I call structural or omnibus reforms. So my favorite example here is that there are insurers out in California that have forced police departments onto performance improvement plans. Now, if any of you does employment law, this is a familiar concept from employment law. This is the kind of thing you might do with an employee who's having trouble before you pull the plug on the employee. It is not totally unlike subjecting one of these cities to an injunction or a consent decree, where if you want to get out from under this extra supervision, you have to go through this 10-step plan. And the big difference, of course, is that injunctions or consent decrees are court-ordered, but these performance improvement plans are coming from a private insurance company. Another example involves something called the Lake Winnebago Area Metropolitan Enforcement Group in Wisconsin. The MEG, as it's called, is a multi-jurisdictional task force, and they botched some really important high-stakes drug raids. And the major insurer in the area, which insured most, or it may have been all of the jurisdictions that participated in the MEG, the insurer did sort of a postmortem and tried to study what went wrong. And it concluded that a failure of oversight and a failure of accountability was partly to blame for the problems in the drug raids. What happened is that MEG officers were out in the field together, but each officer was answering to his or her own home leadership. And so at the insurer's urging, the MEG consolidated its oversight and its leadership at the state level with the Wisconsin Department of Justice. Now, one of the big questions I asked myself throughout this body of research is, why would these municipalities let these insurance companies tell them what to do? The mechanism, I think, is more complicated here than it is in a typical insurance relationship, like my relationship with my car insurer. If my car insurer tells me to do something, why do I do it? Well, because I assume that if I don't do it, my premiums are going to go up, and I don't want to spend more on premiums. But when you're thinking about a public entity as the insured, the relationship is not so straightforward, right? The dollars for the increased premiums are not coming out of the police chief's pocket usually. They're certainly not coming out of his or her pocket as a private citizen. They're often not coming out of the mayor's pocket, right? It's coming out of the tax base. So why exactly do the municipalities care? Well, it turns out, and we could talk about this more if we have time, but it turns out that at the end of the day, um, insurers control the availability of coverage and the pricing of coverage, and that for a somewhat complicated set of reasons, most municipalities do care about that. And the insurers have various ways of communicating with the municipalities about the likelihood of coverage or the likelihood of rate increases. So for example, when you apply for one of these policies, this is actually an excerpt from an application that a municipality would fill out when applying for police liability coverage. You'll be asked, do you have written policies and procedures in the following areas? And if so, attach a copy. And you can see that it includes a lot of high stakes maneuvers like the use of deadly force, police pursuits, and other things like this. This communicates to you, if you're the applicant for an insurance policy, that this is something the insurer cares about, and that the answer to these questions is likely going to affect whether you get coverage, and if so, what amount you'll pay for that coverage. Now, in addition, there's another piece of evidence that agencies have very strong incentives to listen to what their insurers say. And it's this: the consequence of not listening, the consequence of prolonged resistance to the insurer when the insurer is telling you what to do, can be termination of coverage. And the consequence of that can be game-changing. And so there are numerous examples that you can find reported on in the media, if you just look for it, where municipalities have actually had to shut down their police departments entirely rather than running the departments without insurance. In other words, the insurer says to the department, Nyota, Tennessee was one of the departments where the insurer actually got the leadership to fire particular officers. I'm sure the first response was, buzz off. You can't tell us who can be an officer in Nyota and who can't. And the insurer said, fine, but you can't tell us whether to provide you coverage or not. And if you keep these officers on, these officers who keep causing all these problems, we're going to drop you, right? And in a town the size of Nyota, it's a small town, if you lose your insurance coverage, it might be just too risky to have a police department at all. And so all these municipalities and more have shut down their departments entirely. And what they usually do then is contract for policing services, either with a nearby city or sometimes with the surrounding county. Now, the core of my research in this area, and what I've described to you so far, is empirical, qualitative empirical, and descriptive. But I think the research also raises a couple of interesting theoretical points, and I'll end with these. So first, the dynamics that I've described, I think really invert the ordinary model of governance, which we think of as involving public regulation of private actors. Now, long before I came on the scene and started doing this research, there was already a rich literature about regulation by insurance. So one common example was the way in which environmental insurers enforce environmental regulations through their contractual relationships with the companies they insure. And our colleague Omri Ben-Shahar has written about this, for example. But here, in the policing context, what we're seeing is that the phenomenon of regulation by insurance extends as well to public insureds. And furthermore, private insurers are regulating these public insureds according to constitutional law and not just statute or regulation. A second point, which is closely related to the first, is that in the course of regulating these public entities, insurers end up not only enforcing the Constitution, but also constructing its meaning. So I gave you the example near the beginning of the talk about strip search policies. Well, there's a little bit of Supreme Court law on point, but not really enough to help you promulgate a very specific set of instructions for officers to follow. And so what happens is the insurer will read those Supreme Court decisions, and then it will translate them into policies, often infusing them with a sort of risk minimizing attitude toward police protocols. And so there's a connection here to a body of theoretical work about the interpretation of the Constitution outside the courts, and also to a body of socio-legal work about how various institutions mediate legal norms when translating those norms into routine policies and protocols. So among other things, I think this is a really important and interesting part of police liability insurance, is that among other things, in the hands of these insurance companies, liability for police misconduct, which is quite obviously an extremely explosive topic, it becomes this kind of anodyne thing called loss to the police agency, and loss must be controlled. So it's not about the insurance company coming in and telling the police department that your officers are out of control, your officers are behaving badly, they're doing something unethical or immoral or criminal. Instead, the message is, look, we know you have hard jobs, you put yourselves at risk for us. We're just the actuaries, and what we can tell you is that we're looking at the numbers and they don't look good. And we need to take some steps to try to manage the risk that your police operations create. And I've argued in some of my work, tentatively, but I'll stand by it, that by denaturing the law in this way and actually stripping away its moral valence, insurers might actually advance the law's aims if they can communicate their message more effectively to police departments, who will be less defensive when the message is delivered the way it is by the insurance companies than by activists and protesters. And that's not to deny the importance of activists and protesters in police reform, but just to say that there are other components, and insurance companies can sometimes be a helpful intermediary. So I'm going to stop there and invite Tom back into the conversation, because I know he had some questions for me.
Thank you, John. That was fascinating and insightful. I do have some questions for you. Some of them have been submitted by participants in advance. But as the dean, I get the privilege of asking the first question. So I want to ask a question that I think is I don't want to say, maybe it's a University of Chicago style question, in that it's of the genre. You've given us a lot of information about apples, but maybe the problem is oranges. So everything you say makes sense when we're thinking about the policing problem, the policing harm that we have in mind is, say, excessive force. That can give rise to excessive liability, and in turn, that creates the financial incentives that you describe. But some kinds of police activity that society wants to regulate, like, say, stop and frisk, those are typically not the kinds of harms that create highly compensable injuries. And so in that context, there's no mechanism for regulation by insurance because there aren't the strong financial incentives. Is there a reason to believe that insurance can function successfully with respect to these types of police activities as they can with respect to others?
Yeah, thanks. It's a great question. So I think the premise of the question is absolutely right. And I've tried to be clear both in my written work and today that I'm not here to say that liability insurance is a panacea. I already flagged one reason to think it's not a panacea, which is that actually the largest cities in the country, like the Minneapolises and the Chicagos, don't buy insurance on the market. And I think you flagged another reason to recognize that this insurance mechanism is not a panacea. And that's that, not all police misconduct is the same. And so we might think that different institutional regimes might be necessary and most effective at combating different kinds of police misconduct. And so, in my opening remarks, I tried to show why I think insurers do some valuable work in trying to reduce certain kinds of police misconduct. And I agree with you. I think excessive force is the archetypal case. But there are other places where the effect of insurance on policing is likely to be weak or even potentially perverse if it creates moral hazard. And so it's worth thinking a little bit more carefully about what is it that makes insurers good at regulating excessive force and bad at regulating other things. So I want to share just one slide on this point. Let's see. Okay, so I actually have a paper where I try to take on this problem a little bit. I try to think about the universe of police misconduct from the perspective of regulation by insurance. And most of what I wrote in the paper is captured by this figure. And I say in the paper that I think we can divide the universe of misconduct along two dimensions. The first is the dimension that you already mentioned, which is the dollar value of the legal claims to which each type of misconduct typically gives rise. So the problem for stop and frisk is that claims about an unconstitutional Terry stop, for example, perhaps the claim is that the officer stopped an individual, maybe frisked an individual without adequate justification. Those claims do not typically trigger substantial compensatory damages. Now, to be clear, this is not a normative assertion on my part. This is not me asserting that Terry stops are not a big deal. This is a descriptive point about the amount of money a plaintiff can ordinarily get for a successful claim about a Terry stop. And the fact is that low dollar value claims like these don't typically support civil damages suits. And so they rarely arise in that posture. Instead, these are claims that are usually asserted by criminal defendants defensively through suppression motions. And as a class, these claims pose little financial threat to insurers. And so insurers have little incentive to regulate the underlying conduct. So all of that is a long-winded way of saying I basically agree with the premise of the question. High dollar value claims, in contrast, do induce potential plaintiffs and potential plaintiffs' attorneys to sue. But as I've written, this doesn't mean that civil damages suits, as they are filtered through this insurance mechanism, work equally well to deter all kinds of high dollar misconduct. Because it turns out, I think, that there's a second important consideration. It's what insurance companies would call the tail of a claim. The tail of a claim is the length of time between the occurrence of the misconduct and the filing of a lawsuit about that misconduct. So to simplify things a little bit, we could say that any claim of police misconduct has either a short tail or a long tail. Excessive force claims are short tail claims because when an officer uses excessive force, the harm that he inflicts is immediately apparent and it's immediately actionable. You can go into court and sue about it right away. But there are other kinds of very important long tail claims as well. And I think the most notable example is wrongful conviction claims. The average exoneree, person who was wrongfully convicted of a crime and later proves himself innocent, the average exoneree spends over 13 years wrongfully incarcerated. And he can't sue for civil damages until he's released and exonerated. Now, not all wrongful conviction claims include allegations of police misconduct, but many do. And when they do, they are covered typically by this kind of insurance. And so you might think that insurers have a strong financial incentive to prevent the kinds of police misconduct that contribute to wrongful convictions. But that long tail, that 13-year tail, creates a lot of complications that make the risk really difficult for insurers to price and manage. So as one example, the long tail heightens the degree of correlation or statistical dependence among the covered risks. So in that 13 years between the police misconduct and the exoneration and lawsuit, there might be some new judicial precedent or piece of legislation that might expand the area of liability or ease the burden of proof for future plaintiffs, or somehow just cause like a common upward shift on the value of awards on all the outstanding claims. And the more that risks are correlated in this way, the less insurers can do to reduce those risks by aggregating them. And this is why risks that affect a large number of policyholders simultaneously like an earthquake, they're commonly excluded from run-of-the-mill insurance policies. And so for similar reasons here, the long tail, it creates a lot of uncertainty about the number and also the magnitude of wrongful conviction claims that insurers should expect. And when insurers are faced with uncertainty, they can't accurately price their coverage. And if they can't accurately price their coverage, it really hamstrings their loss prevention capabilities. And so just to recap, insurers are not a panacea. They do a much better job of regulating some kinds of police activities than others. And the broader implication here is that we need multiple institutions involved in regulating the police, because each institution is going to have its own unique set of incentives and capabilities.
Thanks, John. So let me go to another question that we received, and this one I especially like, and you'll see why I really like this one. This is a question about the qualitative information and the examples that you've shared, and they're terrific. And I think for many of us, they're new and it's kind of surprising. But this question is about the quantitative information that data insurers collect. And so, I'm an economist. I love quantitative information. Nothing better than digging into some numbers. And of course, these insurance companies have a lot of data. For academic researchers and for public policymakers and for courts, it's often very hard to find good information about policing activity, to find data about policing, especially when, as you pointed out, a lot of the activity that law and courts are concerned about doesn't pertain to the very biggest cities. It doesn't pertain to New York or Chicago or Los Angeles. There's a lot of other cities out there that we're concerned about. So does this suggest that the quantitative information that insurance companies have are a potential untapped resource or untapped data source for academic researchers to shed light on how police are actually conducting themselves?
Yeah, so one of the most exciting parts of this line of research for me is that after I published my first paper on the topic, which is basically telling the story that I laid out in my opening remarks, an insurer actually reached out to me and offered to share some claims data with me. And so I can show you a little bit about that data right now. Let me share my screen again. So this is an insurer that provides police liability insurance to about 350 law enforcement agencies in a mid-sized state. I'm not allowed to say which mid-sized state, but it's a mid-sized state by population. And there are a couple of things that make this data set really exciting from a research perspective. The first, as I just said, is that it covers 350 agencies. Law enforcement in the United States is highly decentralized, right? I mentioned near the outset of my talk, there are over 15,000 local law enforcement agencies, and each one keeps its own data in its own format and defines its terms its own way. And this makes it exceedingly difficult to aggregate data from multiple agencies or to compare one agency to another. But here, in this context, we have a single data set kept by a single entity that covers hundreds of agencies. Second exciting point for a data-driven researcher is that the data set goes back 23 years. It actually goes back a little bit farther than that, but the data is really good for at least 23 years. And this is highly unusual for policing data. A lot of police data is purged after some period of time, or they change data collection systems many times over the course of 23 years. But this insurer has been keeping data in the same format, the same quality for 23 years. And there haven't even been any significant changes in the way the data has been collected over that period of time. And then a third exciting thing about the data is that the data are rawer in a sense than much of the data that researchers are forced to use when studying police behavior and liability. So lawsuit data, for example, which is used in a lot of papers, it turns out that lawsuit data, litigation, is a very small and biased subset of insurance claims data, okay? Because not all insurance claims lead to lawsuits, and it's not a representative subset of insurance claims that lead to lawsuits. Many insurance claims are resolved before litigation. And so if you are studying policing using even a comprehensive set of all lawsuits against police departments, you're not going to see 70% of the claims that I can see in this data set. So when I got this data set, I teamed up with an economist. Actually, I remember what I did is I came to you and I asked you for suggestions of people I should team up with. But you were occupied with another job at the time, being the dean of our law school. And so we talked about some other candidates, and I ended up teaming up with an economist named Orly Oos to think about what we could do with this data set. And we realized that the characteristics of the data set that I just highlighted would allow us to weigh in on an important societal question that other data struggle to answer. We knew, because we don't live under rocks, that policing and police misconduct had become extremely contentious in recent years. We'd watched the same videos on the internet that everyone else has watched of police officers using force, including sometimes fatal force, against unarmed suspects. And at the outset, we verified actually that our impressions of the salience of this topic were not just unique to us or our peer groups. You can actually see it in the data. So this is Google Trends data, which basically tracks search activity for certain phrases. So this is for the phrase police brutality. And it's normalized on a scale of 0 to 100. And you can see that red line on the graph there is the summer of 2014. And people who follow these issues closely would know that that's the summer when Michael Brown was killed in Ferguson, Missouri, and Eric Gardner was killed in Staten Island, New York. And you see the public interest in police brutality just spike upwards that summer as measured by Google search activity. And you can also see it in media coverage. So this is a measure of the number of articles mentioning police brutality in, I think it was the 50 major newspapers. And you can see it just spike upwards in the same exact time, summer of 2014. So something was really going on here. But what we didn't know, and what really no one knew, is whether the police were beginning to spiral out of control, or whether society was just starting to wake up and pay more attention to a problem that had always been there. And so that's the question that we set out to answer. And we now have a paper that's going to be published soon in the Journal of Legal Studies presenting these results. So let me show you a quick version of our analysis. And you know, a caveat before I begin. A huge amount of the empirical research on policing is drawn from data from a single city like New York or Chicago, and it tries to teach general lessons using data from a single city. In some ways, I think we improve upon this because we're using data from 350 agencies, but you know, it's still just one state. As is the pattern nationwide, some of the largest cities in the state, which are probably also the most racially diverse cities in the state, self-insure rather than buying insurance on the market. And so those big cities are not in our data set. So while we are studying what we think is an important sector of American policing, because, you know, after all, not everyone lives in Chicago or New York, it's also true that our findings may not be representative of what's been going on in urban policing. Okay, so with that caveat out of the way, the first thing we did is we said, let's just make a simple plot of the number of insurance claims each year and see whether it's been going up or down over time. And this is what we got. Now, a claim is a file that's opened every time someone in one of these 350 cities said that the city owed them money because of something a police officer did, no matter how small and no matter how informally the allegation is made. So you send an email to the city, that's going to trigger a claim. It doesn't have to be something as formal as a lawsuit. You don't have to have a lawyer to do this. And when we plot the number of claims over time, you can see that it's pretty flat. It's even trending slightly downward. Well, then we thought, okay, maybe it looks like this because maybe what's happening is that the sort of unimportant kinds of claims are trending downwards. But it could be that more egregious kinds of claims, they could actually be going up and you wouldn't see it when looking at this graph. And so we hand coded all of the claims by type. And you can see here, I just provided one of the types, which is excessive force, probably the thing that people are most worried about, most concerned about for obvious reasons. And we can see that excessive force claims also are pretty flat, even trending slightly downward. So, so why does it feel impressionistically like things are getting worse? If claims are going down, excessive force claims are going down. Well, the next thing we looked at was police-related payouts over time. And here we see a very, very different picture, okay? Total payouts over time, and this is the years 1995 to 2015, they're going up over time. And there's a huge spike between 2013 and 2015. And you see the same things here for average payouts per successful claim. You also see that plaintiffs are winning more often. They're winning claims at a higher rate, and they're winning a higher absolute number of claims over time. Then we thought, okay, these payout trends, they could be driven by a few massive outlier claims that occurred in 2014 or 15. But it turns out they're not, right? The median and the third quartile payments, which are what you see here, these are climbing too over time. So it's not being outlier driven. And so there's something of a puzzle here, we think, right? The number of claims is gently declining over time, but the number of successful claims is rising, as are payouts. And in the paper, we consider a variety of potential explanations for these patterns in the data. We consider three potential explanations. One is that people improved claim selection. So the basic idea here would be, sure, fewer claims are being filed, but they're better claims, right? And that's why they're more likely to win and more likely to result in lofty payouts. Another could just be that although the number of claims is going down, the severity of the harm is rising, right? Maybe the police are becoming more militarized or police community relations are deteriorating. And so even though, like, for example, the number of excessive force claims is going down, it could be that each excessive force claim is more serious and involves a more serious harm than it used to. And a third potential explanation is that, police behavior is not actually getting worse in these 350 cities, but that public attitudes are changing drastically, and that's what's driving the trends we see in payouts. And in the paper, and I won't have time to go through it today, but everyone's welcome to read the paper when it's out, we go through these explanations and we rule them out one by one, and we show how certain aspects of the data are inconsistent with each of the explanations except for one. The explanation that's most consistent with the data, we think, is the last one, which is that policing, at least in the 350 cities that we're observing in our data set, it hasn't been getting worse over time. And instead, public attitudes towards harmful policing are changing. People have become more sensitized to police wrongdoing, and sharply so after 2014, after the summer of 2014. And this leads to higher win rates for plaintiffs who are bringing claims against the police, and for higher payouts for those plaintiffs who succeed. Just two disclaimers, so I don't get myself in trouble here. The message is not that police is just self-improving, okay? Just give it time, sit back, and the incidence of harm will just naturally fall. The decline that we observe here in the number of claims over time and the number of excessive force claims over time, it may well have resulted from policy efforts on all sides of these issues, including protesters and activists, and also the insurance companies. This one insurance company that is involved in the very type of loss prevention initiatives that I described to you. It's also true that falling crime rates and arrest rates during this period may have helped as well. And the second disclaimer is that I in no way mean to suggest that because claims are declining over time, that they're low enough, right? It could well be that they are declining, but they are far higher than the socially optimal level. And so the message is not supposed to be that progress, if progress is what we really have, recommends complacency. That's not what I'm trying to communicate here.
Thanks, John. Nothing aggravates me more than missing out on a great research project. But congratulations on those findings.
Thank you.
Let me move on to another question that was submitted, which is to say a little bit more about, you mentioned self-insurance. What does that term mean? And what can you describe that's relevant to cities that engage in self-insurance?
Yeah. So in self-insurance is a very broad term, and it means a lot of different things in different places. Most generally, self-insurance is a way of saying that an entity does not purchase insurance on the market, that it insures itself. So if I drive around without auto insurance, people who work in this area would say I'm self-insured, which means that if I cause an accident and money has to be paid over, I fund it myself. Okay. Now, what this can mean for police departments is it lies on a very big spectrum. So at one end of the spectrum, self-insurance means just going without insurance, paying judgments as they come, and ignoring the problem of loss prevention and risk management. That's what we hope not to see. But at the other end of the spectrum, self-insurance could actually mean you run your city, you run your police department almost like an insurance company would. You might have a risk manager who works for the police department or for the city, who does the kinds of things that I described the insurance company is doing, but just keeps it in-house. They don't need, or frankly probably want, an outside company looking over their shoulder, but they understand the value of controlling these costs. They might set aside payments just like premiums, like you would pay premiums to your insurer. They instead will pay the equivalent of premiums into a rainy day fund, and they know that that's going to be there to pay judgments when they come, but they're going to try to take steps to reduce the likelihood of those judgments. So self-insurance can mean any of those things. And so to say a city is self-insured, that alone tells you very, very little. And I think this is an area that needs a lot more research. There is a little bit of work by some criminologists from, it's probably at least a decade old now, who surveyed self-insured cities to figure out how many of them had risk management departments or risk managers in-house, and the answer was very, very few. Not zero, but few. I hope that more have developed risk management mechanisms in the last decade. I fear that maybe not many have. And so I think there's room to learn more here descriptively, and I think there's room to think more about how cities that self-insure can learn from the mindset that these insurance companies bring to this problem.
Thank you, John. I think we are almost out of time, but let me squeeze in one last question. And this question is motivated by reports that have been in the Chicago press for some time, that in recent years, the city of Chicago has paid out about $1 billion in liability and in legal fees in police misconduct cases. What portion of that has been covered by insurance? And then also within the past few months, Chicago has just gotten a new police superintendent. And what do you think the prospects are for this new superintendent in changing police behavior here in Chicago?
Sure. So the short answer to the first part of the question about what amount of the $1 billion that Chicago's paid out has been covered by insurance is that I don't know exactly. I have heard informally, although I have not been able to confirm in any written document, that Chicago carries something called excess liability insurance. And this is usually insurance that is there only for the most catastrophic risks. And it will usually have what we might in everyday parlance call a deductible, what they call a self-insured retention. It might be something like $10 million. But this insurance is there just in case something goes catastrophically wrong. You know, a police car runs over a dozen pedestrians and they all lose their lives. And the payout is actually more than $10 million. That insurance would then kick in. And I don't know, unfortunately, I'm not sure that anyone knows how often that insurance has actually kicked in over the last few years in Chicago. So my guess is that very little of that $1 billion has been covered by insurance, but it might be more than zero. On the second part of your question, look, I do think that leadership matters. I gave you the example earlier of how Calumet City's insurance company actually forced it to bring in a new chief from outside the department, precisely because the insurance company believed that leadership matters, and that sometimes when a police department is having problems, it's because of cultural problems that are difficult to change without new, fresh leadership. I will say that, quite frankly, and I know that the system is just changed and that the facts are evolving very quickly, perhaps even in the last hour while we're on this call. What I had seen of David Brown in Texas was very promising. He was, I think, regarded as a very progressive police chief in his time in Texas, and I was excited when Mayor Lightfoot picked him as the new leader of the Chicago Police Department. What I've seen over the last couple of days gives me serious pause, if I'm being honest. And I know that the facts are not all with us yet. And so I'm going to try to reserve judgment. But over the weekend, I watched a lot of videos from different cities around the country where, there were police leaders who were actually out there making peace with the protesters, even marching with the protesters. And that may not be everyone's taste. It is kind of my taste. I liked to see that. It was happening in Houston and Norfolk, Virginia, and Flint, Michigan, my home state. And that's not exactly what I saw from Chicago over the weekend. So I guess my position now would be, could Mr. Brown bring about change in the Chicago Police Department? Absolutely. And I think that he accomplished enough good in his time in Texas that we should give him a little slack, and that these protests in the wake of the death of George Floyd are tremendously difficult to manage. But that optimism is quite cautious because the culture here is deep, and it doesn't, frankly, look like things are off to a great start. But I'm going to be pulling for him, rooting for him, because I want to see change. And right now, he's the person best positioned to work with the mayor to bring it about.
Thank you, John. Thank you for that. And thank you for this entire hour. And thank you for giving us a tremendous Emeritus lecture. It's been a fascinating discussion, and thanks for sharing your research with us.
Thanks for having me.
Great. And I want to thank you and thank also our alumni and friends who joined us and for tuning in this new format, in this new way. Thank you so much for doing it. Thank you for all of your engagement with the law school. We look forward to sharing with you new online programming options. Please watch for more information as we develop and refine this. And I wish all of you health and safety in all this time. And I very much look forward to the point where we can again see one another in person. Please stay well. Thank you again for joining us. Best wishes.